Stop what you're doing. Close the other tabs. Turn off the noise. Because what happened over the last 72 hours was not a market correction, not volatility, and not even a crash. It was a coordinated strike, and it proves the battle for silver was effectively decided before the West even realized it had begun. If you don't understand what I am about to show you in the next 15 minutes, you're going to watch a 50-nation strategy collapse in real time while China quietly walks away with control of the global physical silver supply. Today is Friday, February 6, 2026. Silver is trading at $76.64. Gold is at $4,859.30. On Thursday, silver collapsed from $89 to $63.90, a 16% move in a single session. Today, it rebounded, and analysts are calling it a bear trap. They're wrong. This wasn't a trap. It was an ambush. While everyone was watching price charts and debating support levels, China removed 18 tons of silver from Shanghai vaults in just 72 hours. That's more than 500,000 ounces gone in 3 days. That isn't profit-taking. That's a raid. On Wednesday, the United States stood alongside 50 nations and announced a coordinated mineral strategy, strategic reserves, joint purchasing, and long-term plans to weaken China's dominance in refining. Markets applauded, and the media called it historic. Less than 24 hours later, silver crashed. And while prices bounced today, physical silver continued to disappear at the fastest pace we've tracked all year. This isn't about the price on your screen, it's about the metal you can't buy at any price. And the trap was set weeks before that announcement was ever made. I watched the announcement live. I read every line of the framework. Then I tracked what happened next, because in resource warfare, execution matters more than speeches. What happened afterward proves China was ready. They didn't react. They activated. Within hours of the announcement, withdrawals from Shanghai Futures Exchange vaults accelerated to 18 tons. That's the fastest withdrawal rate we've seen all year. The timing matters. As soon as the West announced future coordinated buying, China began draining current supply from the only transparent vault system the West can still monitor. That's not coincidence. That's coordination. Then came the second move. China's export approval process for refined silver effectively stalled. Refiners are reporting indefinite delays for shipments requiring Ministry of Commerce approval. Before the summit, approvals took 3 to 4 weeks. After the summit, they stopped moving entirely. There was no official ban, no headline, just enforcement delays that function as a freeze. That's strategic restriction without triggering diplomatic fallout. The third move changes everything. Market intelligence indicates China has doubled its state-directed silver purchasing program from 500 tons per month to 1,000 tons per month. That's more than 32 million ounces entering Chinese reserves every 30 days. Global mine production is roughly 1 billion ounces per year. China just committed to absorbing close to 40% of annual global supply every year, without bidding prices higher in public markets. These purchases are happening through bilateral agreements, off-exchange transactions, and state-owned enterprises. While the West announced plans to build reserves, China doubled the reserves it has been quietly building for the last year and a half. 3 moves in 72 hours accelerated vault withdrawals, export tightening, and reserve expansion. This wasn't improvisation, it was execution. Now look at the price action, because it proves the strategy is working. On Thursday, silver collapsed nearly $19 in a single session. Algorithms triggered, leverage was flushed, panic took over. But physical demand didn't disappear. Vault withdrawals didn't reverse. Chinese buying didn't slow. While paper prices were crashing, physical premiums in Asia surged. 1 kilogram bars in Singapore, normally priced 3 to 5% over spot, traded at 12 to 15% premiums during the collapse. Even today, with silver back above $76, premiums remain elevated. That's the signature of a broken market, where paper collapses and physical tightens. This disconnect is exactly what China needs. When price discovery breaks, whoever controls the metal controls the outcome. That's why this didn't start on Thursday. Go back to January 30th, when silver surged above 150 and then collapsed more than 30% within 24 hours. That wasn't a bubble popping. That was positioning. If you know a major Western buying announcement is coming, you crash the paper price first. You flush speculators, trigger margin calls, and create fear. Then, when the announcement arrives and everyone expects a rally, you crash it again. Maximum confusion, minimum resistance. That's exactly what we saw. Vault data confirms it. Shanghai inventories were stable for weeks, then withdrawals surged the moment the summit began. That means orders were pre-authorized, purchases were pre-funded, and export delays were pre-written. All China needed was the trigger. Now the 50-nation strategy is already obsolete. It assumes there's time to build infrastructure. China is owning the supply before that infrastructure exists. It assumes unity, but bilateral deals become irresistible when China offers guaranteed purchases at premiums. It assumes miners will expand production, but extreme price volatility destroys financing. Projects that work at $115 don't get funded at $75. China can afford to buy physical silver at high prices while crushing paper prices to keep Western miners sidelined. That's not market behavior, that's strategy. Even if the West executes perfectly, China wins the inventory war. Infrastructure without feedstock is meaningless. We've seen this playbook before with rare earths, gallium, and germanium. The West announces long-term plans. China tightens short-term supply. By the time alternatives exist, China already owns the inventory. Silver has now joined that list. This isn't just a commodity trade. It's industrial control, financial leverage, currency strategy, and geopolitical pressure rolled into one. While the West plans, China moves. The last 72 hours proved it. This isn't speculation, it's pattern recognition. Track the vaults, not the headlines, because right now, the vaults are emptying faster than any committee can fill them. Action beats announcements, speed beats structure, and China is moving faster.